How's it going today, guys? Welcome back to Stock Radar. I hope you are having a fantastic week here. And this week we are going to be talking about Shopify stock. That is the stock you guys voted on over in the private Facebook group. So let's go ahead and get into it and talk more about this stock. So first of all, let's cover the basics of this stock here. The symbol is SHOP on the New York Stock Exchange. This is a stock that recently went public in May of 2015. So we're going to talk about that a little bit later on. Now, currently the PE ratio, they don't have a PE ratio because they are not a profitable company. They are not turning a profit, and they never have. Their dividend yield is obviously 0%. If they don't have any profits, they wouldn't be able to pay a dividend. They're focusing on growth right now, and their market capitalization is $17 billion. Now, what type of investment is this? Some people are going to argue and say this is a small cap growth or even a mid cap growth stock, but because this company is not profitable and the losses have been expanding, I'm still going to categorize this as a speculative investment, and I know some people might disagree with me on that, but I do believe that it is still speculative simply because they have not turned a profit and losses have been expanding. And as far as the age goes, this is actually a 14-year-old company. So let's go ahead and cover the basics of this company and what it is about. Shopify is a Canadian e-commerce company based out of Ontario. They have a proprietary e-commerce platform called Shopify for online stores and also retail point of sale systems. Shopify allows you to build an online store easily, so they essentially took all of the headaches out of building an online store through traditional web design means. I actually have a guy who lives in my building who used to do that as a job. He used to design websites, and he would also design e-commerce websites, and between Wix and Shopify, that put him out of business. But he wasn't upset about it. He has a new business season now, but he said it's amazing what Shopify does for you. He says, in 10 minutes, you can build a store that he would have had to do over the course of 6 months, charging people, $20,000 or more to build that. So essentially what they've done is they've put that power to have an online store in anyone's hands for a subscription basis where you pay monthly to have a Shopify store. So Shopify allows you to build an online store easily. They offer tools for marketing, shipping, checkout, payments, and more. And a very impressive amount, $63 billion worth of goods and services have been sold via Shopify. And they have over 1 million active Shopify users, people who are using the platform, making purchases. And they have over 600,000 merchants on the platform who have their own Shopify stores. So how does Shopify make money? Like I said, they charge a monthly subscription to have a Shopify store. So Shopify makes money by charging a monthly subscription to merchants selling on the platform. The cheapest is Shopify Lite, and that's not even mentioned in these free plans here because that only allows you to sell on Facebook for $9 per month. Next, you have basic Shopify for $29, Shopify Standard for $79, Advanced Shopify for $299, and then above and beyond that, they have Shopify Plus, which is for large enterprise-sized businesses, and the pricing for that is different for each business based on their needs and what they're looking for, but those are for very, very large businesses that have a very high volume of sales. They need specific tailored solutions for that. So now let's go ahead and talk about the valuation of Shopify stock. And in my opinion, this stock is overvalued at this point in time. Now, yes, they are an aggressive growth stock. They've been seeing aggressive growth. But again, like I said, I still believe this investment is speculative in nature because they have not turned a profit. The trailing PE, obviously not applicable because they are not turning a profit. But based on their forward earnings potential, their forward PE is a 288. And the price to earnings to growth ratio is a 9.45. These are numbers that personally I am not comfortable with as an investor. Now, the other thing that I always look at is the analyst price target. I don't tend to really care what analysts have to say about a stock, but I do look at the consensus estimate as far as where they're expecting that stock price to go. And I like to see a stock where the analyst's price target is well above where that stock is trading at today. And with Shopify, we see the exact opposite here. The stock was trading at $167.07 per share when I grabbed this, and the analyst price target on average is $147.34. So that implies about 12%, 11.8% downside with this stock, just among the average estimates among analysts. So that is not something I like to see when I'm looking at a potential investment. And again, that's another reason why I believe this stock is overvalued. And then let's go ahead and compare it to some of the competitors here. we have Shopify, we have PayPal, and then we have Baozun, I think it's Baozun, maybe I'm pronouncing that wrong. That is a Chinese e-commerce platform very similar to Shopify. And then we have Square, which is a payment processing service. So Shopify, the PE, they don't have one right now. PayPal has a PE of 56.4. Baozun has a 112.1. And Square, I'm guessing they're not profitable either. Theirs is also not applicable. Shopify has a forward PE of 288, PayPal 31.4, Baozun 32.5, Square 84.2. So among their peers here, they have the highest forward PE ratio. But when you look at the PEG, Shopify's a 9.5, PayPal's a 1.9, Baozun is a 34.4, which is astounding, and Square is a 2.6. So this is by no means a cheap stock. This is a stock that is trading at a very high valuation based on the anticipated growth. And when we take a look at the balance sheet here and the growth this company has experienced, it's going to start to make sense why this stock is trading at such a high valuation. Okay, now let's go ahead and talk about the pros of investing in Shopify. First of all, they have subscription revenue from over 600,000 merchants, which is going to be a very consistent revenue stream for them. And I like businesses with predictable income. And the other thing is they are expecting to see double-digit e-commerce growth up until 2021 and probably even more going forward. So I know this chart looks a little confusing here. You're saying, okay, growth is declining, but that is the year-over-year growth in sales worldwide of e-commerce retailers. So 2014 was above 25% growth, 2015 above 25, 2016 above 25, and then naturally it's going to decline slightly, but we're still going to be seeing double-digit growth of e-commerce for a very long time. So this is from Statista here. They're expecting to see a little over 20% growth in e-commerce for 2019, just under 20% for 2020, and somewhere around 17 to 18% for 2021. So when you're seeing massive growth of e-commerce, you're going to see all these e-commerce companies benefiting from that as well. Another pro is that Shopify is not competing with Amazon because Shopify allows you to sell on Amazon. So this is a rare instance here where you have an e-commerce company that is not competing with the behemoth. They work harmoniously with each other because Shopify allows people to sell on the Amazon platform. Earlier on, they were competitors, but from what I can gather, Amazon basically decided, okay, I'm not going to try to compete with them. I would rather work with them. And so Shopify is in a very comfortable position here where they work in harmony with Amazon and they're not competing with them. Another pro is the fact that Shopify is investing heavily into growth and it's not focused on profits, similar to the business of Amazon. Now, for some people, this is a pro, and for others, it's a con. Personally, I like to see companies turning a profit before I begin to invest in them, and up until that point, I still consider it to be a speculative investment. But some people would rather know that the company is taking their earnings and reinvesting it back into the growth of the business and growing at the fastest rate possible, and this, again, is very similar to that business model of Amazon. And then another pro here is the fact that Shopify has many sales channels and they're always investing in new channels as far as platforms and apps where people can sell their products. So this was dialogue here from their website. Increase sales by selling your products across multiple sales channels. Sync inventory and orders when you sell in person, online, and through social media. All sales channels connect with the core of your Shopify business. You can easily keep track of your products, orders, and customers across all platforms from your Shopify admin. So you're able to sell on Facebook, you're able to sell on Instagram, on your Shopify website, and even in person through your POS, and be able to keep track of all of your inventory and all of your sales in one place. And that is one of the major perks of what Shopify is offering. And here's just an example of some of those sales channels that they're integrated with. We see obviously Shopify point of sale, eBay, Facebook, Facebook Messenger, Amazon, Shopify Pinterest, BuzzFeed, and they also recently rolled out Shopify selling on Instagram as well. Another pro here is the fact that there are massive international growth opportunities as they are serving users in 175 countries. And international merchants currently only make up 19% of revenue, so the majority of their revenue is coming from US merchants. So there is a huge opportunity for growth with them expanding into other areas and serving those international customers. The other pro here is that Shopify Plus, that's their enterprise solutions, has over 3,600 customers, including Live Nation and Ford. So Live Nation and Ford are using that Shopify Plus platform for their enterprise level e-commerce businesses. So when you see businesses like this using that platform, that really boosts their credibility and people's faith that they have in this platform. So moving on now, let's go ahead and talk about the cons of Shopify. One of the biggest cons here is that Shopify does have a higher churn and lower success rate among merchants. And the reason for this is because this became the perfect business opportunity for people to sell to others. And I'm sure you've seen Alex Becker on YouTube. I'm sure you've seen Kevin David, these guys that are selling the business idea behind Shopify. Working from home, working from a laptop, make $10,000, make $100,000 a day by having a Shopify store. And as such, this has really increased the churn rate as far as people joining the platform, having high expectations, and maybe not having that instant success, and then they drop off very soon. So bulls of this platform, people who are supportive of this, compare this to a SaaS, a software as a service company similar to Salesforce. They believe that Shopify should be valued as a company like Salesforce, and Salesforce is known for having a very low churn rate of, I believe, sub 10%. And many of these users of Salesforce use that platform for many years, in some cases 10 years or more. But people who are not supportive of this platform, who are betting against it, compare it to a multi-level marketing type business, which often has a lower rate of success and a very high churn rate. Now, personally, I do not blame Shopify for this. I don't think they had any idea that people were going to take the platform and run with it and use it as a mechanism to launch their online business of teaching people how to start this business. But it's kind of where we've ended up with so many people out there teaching people how to have a Shopify store. I'm sure you've seen the ads on my YouTube channel or on your Facebook feed. There are so many Shopify gurus out there. And my main problem with this is that the business model of thousands of people creating similar stores and advertising to the same people is just not sustainable. At a certain point in time, that becomes saturated, people are making less and less money, and that success rate begins to taper off. So that is my major problem or con with Shopify, is that it does have that multi-level marketing business type feel to it because of the fact that a lot of people are, teaching people how to use this platform. Now, does it work? I'm sure it does work for some people, but does it work for most people? That is kind of the question that you have to ask yourself here. But personally, I've never used Shopify. I don't know anything about it. I don't know anything about what Alex Becker or Kevin David are doing. I just wanted to mention it because I do see a lot of people preaching the Shopify courses and sales techniques, and it makes you wonder, okay, what percentage of people are actually successful at doing this? Another con is the fact that the current valuation for the stock is sky high. Shopify is trading at 288 times their forward earnings potential, which is just a valuation I am personally not comfortable with. And like we said earlier, the analyst price target points to a 10% plus downside for this stock. So for those reasons, I would not personally be investing in Shopify, and also for the fact that they have not yet turned a profit. I'm just not comfortable with getting behind a business with that high of a valuation that is not currently profitable. But that's just my investing style. And for people with a higher risk appetite, this might be something you're looking for. And then there's something else I want to talk about here. It's not necessarily a pro or a con. It depends on how you feel about this. But this is something called Shopify Capital. So Shopify Capital helps entrepreneurs get the funds they need to grow their business with no application process or forms to fill out. Securing capital has never been this simple. Receive your offer. If you're eligible, we'll offer you a choice of merchant cash advances of different amounts at different remittance rates. You choose which advance amount is right for your business, and if you're approved, we'll deposit the funds in your bank account fast. As you make sales, you remit to Shopify a fixed percentage of your daily sales until Shopify receives the total amount of receivables purchased. So I watched this video here. It was like a clothing company that was looking to develop and research a new fabric for athletic clothing, and they didn't have the money to research that, so they applied with Shopify Capital. They got a loan to research their clothing, and now every single unit that they sell, they remit a portion of those sales back to Shopify to repay that loan and also repay a certain percentage on top of that. Now, it's different than a loan because you're not paying a fixed percentage of that loan every single month. You're paying based on the volume of sales that you're doing. So if your product sells like crazy and you're paying 5% per unit sold back to Shopify, then you're paying them a ton of money. But if your sales slow down, the amount that you're paying them back also slows down. And this is something called Shopify Capital. And some people think it's a great idea, and some people are saying, okay, this is a terrible idea to be giving out loans to small businesses. This could go bad very easily. So it kind of depends on how you feel about this. I have no idea what their process is for approving these businesses, but personally, this makes me a little bit nervous about Shopify. And here's just the frequently asked questions page on Shopify Capital. I'm not going to read through this, but if you do have more curiosity about this topic, go ahead and pause this and take a look. But it's not the same thing as loan because of the fact that they're not paying that fixed amount per month. It fluctuates based on the amount of sales they're doing of that project. Or that product rather, and then what percentage of those sales they are paying to Shopify based on their remittance period. All right, moving on here, let's go ahead and talk about the barriers to entry of the Shopify e-commerce business. Number one, the biggest piece here, I believe, is the merchant familiarity. People who are using Shopify are going to be continuing to use it because they're familiar with the platform, and also the fact that you can integrate multiple platforms with this. So you can sell on Facebook, sell on Instagram, sell on the Shopify website, and also sell in person with the Shopify POS, and have all of these things synchronizing together and keeping track of your inventory and your sales. There's a lot of value in that collection of these platforms working together. Second of all, there's a lot of value in the technology behind Shopify. Third of all, the subscription pricing is a barrier to entry, so it all depends on what the competitors are charging for a monthly subscription to Shopify. And fourth of all, like we mentioned, there's a lot of value in those sales channels and the ability to sell across all these different platforms through the Shopify service. Okay, so now let's go ahead and take a look at the financial documents here, starting out by looking at the balance sheet and the total assets. So let's look at the growth of total assets here because it's absolutely astounding. Total assets grew 156% from 2014 to 2015. Total assets grew 101% from 2015 to 2016. And total assets grew 127% from 2016 to 2017. So the average growth rate there since 2014 is 128% per year asset growth, which is absolutely insane growth here. They have more than doubled every single year their amount in assets. And that is why you see that stock trading at that high valuation because of the growth this company has experienced. The other thing I would like to point out here is that they have $0 in inventory because they are a software as a service business, meaning they have no inventory. They're not selling a physical product. They're not sitting on inventory. They essentially could sell as many copies of the Shopify platform as they want and not have to have any inventory. It's really an amazing business, and that is again why I like these online businesses and these software companies as well, is the fact that they don't have any inventory. Moving on, let's take a look at the liabilities here. Shopify has $0 in long-term debt. That is absolutely amazing. I don't know a lot of companies out there that would be able to say that they don't have any long-term debt. They have no long-term debt that they have to pay back. All of their debt is short-term debt that is going to be paid back within the next 12 months. And then when we take a look here at the growth of total liabilities, the asset growth has really outpaced the growth of liabilities. So total liabilities grew 76% from 2014 to 2015 compared to 156% growth of total assets. Total liabilities grew 65% from 2015 to 2016 compared to 101% growth of total assets. And total liabilities grew just 40% from 2016 to 2017 compared to 127% growth of total assets. So total liabilities have been growing at a slower rate each year, and total assets have been growing significantly faster. So the average growth rate of total liabilities has been 60% per year compared to 128% growth per year of total assets, meaning that the total assets are growing significantly faster than total liabilities, which is a definite plus for this company. And total assets have excellent coverage of total liabilities at a rate of 9.9 to 1 in 2017. And to explain that in a more simple term, for every $1 that this company owes, they have $9.90. So that would be a very good financial situation to be in. You have a lot of money there to pay back your debts, and you are certainly not burdened with debt. You have mostly assets with a very small amount of short-term debt. Okay, moving on here, let's take a look at the income statement. Total revenue has increased every year at an average rate of 86% per year. 86% revenue growth is what they have been experiencing. And gross profit has increased every year at an average rate of 83.3%. And that is really my only criticism here. I'm definitely nitpicking, but gross profit is slightly lagging total revenue in terms of the growth, which means slightly higher cost of revenue. So their cost of revenue creeped up a little bit, indicated by that slightly lower gross profit growth compared to the growth of total revenue, but it's not by a large amount by any means. So really it's not a big deal at all, but it was something I thought that was worth mentioning here. Profitability, again, is not a priority for Shopify, indicated by cash flow from operations. As you can see there, it is very inconsistent. Their focus is definitely not on generating cash. And Shopify has also expanded operating losses from 2015 to 2016 and 2016 to 2017. So in 2015, they lost about 18.7 million. 2016, they lost 35.3 million. And in 2017, they lost just about $40 million. So yes, operating losses have expanded, but total revenue has also grown at an astounding rate. But again, I don't like to invest in companies that have not yet turned a profit. And this company is focusing on growth. They do not care about profitability. So now let's go ahead and take a look at the performance of the stock. So Shopify went public at $17 a share in May of 2015. So since that initial public offering, Shopify stock is up 876%. And over the last year, Shopify stock is up 78.4%. It has significantly outpaced the return of the overall market. So Shopify has had a massive run up, and it is again approaching an all-time high here, and I would never recommend investing in a stock at all-time highs. As you can see here, looking at the stock, even over the last year, they've had multiple corrections and pullbacks. One there maybe in October of 2017, we saw a substantial pullback in around April of 2018, and even as recently as this month, the stock has had a pullback. So you do not invest in a stock like Shopify right now. You don't invest at all-time highs. If you do want to be investing in this stock, buy it on a dip, be patient and wait for there to be a pullback with this stock. It will happen. But again, my personal feeling towards this stock is that it is overvalued looking at that forward earnings multiple. It's just a valuation I'm personally not comfortable with, but it's because of the rapid growth that this company has been experiencing. And then finally, let's go ahead and wrap up here with some key financial notes from the Q1 2018 earnings report. So total revenue in the first quarter was $214.3 million, a 68% increase from the comparable quarter in 2017. Unbelievable growth there in total revenue. Subscription solutions revenue grew 61% to $100.2 million. MRR, which is the monthly recurring revenue, as of March 31st, 2018, was $32.5 million. So Shopify is making about $33 million a month from the monthly subscribers or the merchants, and that is up 57% compared with $20.7 million as of March 31st, 2017. So their monthly recurring revenue grew 57%. Again, absolutely insane, the growth they are experiencing. And then gross profit dollars grew 71% to $123.8 million compared with the $72.2 million recorded for the first quarter of 2017. So we saw 68% growth in total revenue, 71% growth in gross profit, absolutely insane numbers. And then when we look at the operating loss for the first quarter of 2018 was $20.3 million or 9% of revenue versus a loss of $14.5 million or 11% of revenue for the comparable period a year ago. So what they're saying is they lost a lot more money in this quarter than they did in that quarter a year ago, but they're kind of sugarcoating it by saying, well, it's only 9% of revenue in this quarter compared to 11% of revenue. So yes, losses are expanding, but it's representing less of their total revenue, which is, a good thing because they're not losing as much in terms of revenue as they were in that quarter 1 year ago. But yes, losses are expanding and they will likely continue to lose money until they decide to turn that dial and focus on profitability instead of growth. But anyways, guys, that's going to wrap up this video here. I hope you enjoyed it, and I will see you in the next one.